Welcome to the Mortgage Minute with Maureen Martin. Today's topic is residential mortgage brokers versus residential mortgage lenders. The term broker, in my opinion, is often overused. Technically, a broker is a liaison between a borrower and a bank. However, in lending, it is most thought that a lender would be loaning their own money, meaning that if I were to work for a company, I would put all my loans through that company. Therefore, I would not technically be brokering the loans to an alternative source. A mortgage broker typically does not loan their own money and uses multiple banks to fund their borrowers' loans. Now for the pros and cons. If your loan officer works for a good lender, which is referred to as a direct lender or a bank, then it can help make the process of the loan extremely efficient because the direct lender or the bank control all of the decisions and all of the money. They determine their turn times, they determine their tolerance for guidelines, they hire they hire their own operations staff. You see where I'm going with this? Now, just because they have the ability to have control over the transaction doesn't mean that they're good at it. So now, with a loan officer who brokers a loan, this can be beneficial if, say, a direct lender doesn't offer a particular product, or when searching for different tolerances with guidelines, restrictions, or even if a client is super rate sensitive. However, my experience on a whole is that brokering a loan is like going to Disneyland during peak hours. You have to get in line for the rides with everybody else. There's no putting your files first because of any urgency. There's no control over turn times, efficiency, competence levels of the employees, etc., etc. Again, a direct lender may not have efficiency as their middle name either, but that's important to ask around to find out what loan officer is properly connected to the right banks. If you must broker a loan, that doesn't mean you will get poor service or higher rates. It just means that you're taking a bigger risk to close your deal because there's no way that a loan officer could know all of the investor overlays, which are extra conditions needed on each file, to avoid delays or requests, or worst case scenario, getting a decline, the D word. Anyways, I'd be more than happy to go over this more with you in one-on-one. Feel free to reach out and connect. This is Maureen Martin, your lender for life.